All right. Wonderful and welcome to the reverse mortgage training. It's called Reverse Mortgage Essential Wisdom for Notaries. Um, we just requested in the chat that you introduce yourself and tell us if you have done a reverse mortgage before or if you haven't. And it looks like we have a pretty diverse group here on today's training. And for me, these reverse mortgage appointments really became among my favorites. They definitely took longer. I had to print a lot more paper, but I absolutely loved working with these signers. And not to mention the passionate professionals that you'll find that work within the reverse mortgage industry. So I am happy to share that these reverse mortgage opportunities abound for you. And I want to set some expectations on what you can expect in today's training. So let me see if this is, there we go. So here's what you're going to learn today. It's going to be a very broad training that will include first some information about the senior demographic and why it might be worth your attention right now for lots of reasons as a notary, but in particular for reverse mortgages. And then we're going to share some of the problems and even the crisis that many seniors are facing right now. And we're going to describe exactly how these reverse mortgages solve those problems, which is why so many financial advisors and professionals use reverse mortgages as a solution to their clients. And because this can be an intimidating topic, Nina Penny, an expert on the subject, is going to walk you through and have some fun explaining exactly how reverse mortgages work. And we'll go into a little bit of the history to see how they once had this negative reputation and now have overcome that through consumer protection and regulation. And then, of course, the best part is we're going to explain exactly how notaries like you can be the beacon of light in this process, helping more people and earning more per appointment through reverse mortgage signings. And we'll also show you exactly what to expect at these appointments and why you make such a difference. And at the end, we're going to share with you our very popular certification program that Nina and I created and how it's housed in High Performance Notary. So, of course, we'll invite you to join us there. And then we'll open it up to Q&A. Now, a couple weeks ago when we did this training, our Q&A got cut off right at the good part, and I promise that's not going to happen again. So if you have any types of questions about how these loan signing appointments work, how and where to get business. Maybe on today's call, you might be wondering if a reverse mortgage is even right for you personally in your own situation. And we'll have Nina Penny right here so you can ask any of those types of questions. So let's jump in and get started. My name is Bill Soroka. I started out as a loan signing agent, like many of you, and I screwed up pretty bad along the way, not knowing what I was doing. And I was completely inconsistent with my marketing. So my phone often went quiet, and I almost went out of business a lot just on that cycle, feast and famine. My mobile notary business was almost my 27th business failure, but then something happened. I started embracing habits and routines. I started my daily dues, which was simply reaching out to prospective clients every single day. And that's when things really started to change and turn around for me. I went from scraping by on just barely $1,000 a month to easily clearing $20,000 to $40,000 a month in loan signing revenue. And then I packaged that system up and I called it the Sign and Thrive Notary Training Course and Community. And through it and lots of other programs you may have heard about, like the Certified Notary Trust Delivery Agent Program, the World of Apostees Certification Program, and the Certified Reverse Mortgage Signing Professional Program, 5 notary books, all of those, I've taught thousands of notaries how to build a business that thrives beyond loan signings. And one of the amazing teachers that helps make that possible is my friend Nina Penny. And she's going to lead you through most of today's training. Now, I met Nina at a reverse mortgage signing where she was the loan officer. And it was my very first reverse mortgage. So I was as nervous as can be. I had no idea what I was doing, but I did know, of course, how to dance around a loan signing, where even if I didn't understand every single document, I could figure it out. I was still good with people. I had great customer service. But the real gift that happened in this particular appointment was that Nina was there. She cared so much about her clients and making sure that everything went smoothly and efficiently that she showed up to the signing appointment and then without judgment helped guide the process and help me through it too. And after that first appointment, we had a couple more, and then we eventually struck up a friendship. And this is us on vacation in Palm Springs last year or the year before. But then, of course, Nina fell victim to my two favorite words. What if? I told Nina that these reverse signings were so intimidating and that they're so misunderstood in the notary community as well as the rest of the countries. But what if we could create a training program that helped elevate the reverse mortgage closing experience? What if the notary knows exactly what the product is and how to navigate those documents and help these appointments close smoothly and efficiently? And of course, she said yes. And since that fateful date in 2017, she's helped teach thousands of notaries to embrace and understand reverse mortgages and the customers that come with them. And that's Nina's passion. That's what I have admired so much about her. Once you work with her, you're going to see why her clients love her. And she strikes up these lifelong friendships with many of her signers, the clients, and even the notaries. So if you would, show some love for Nina in the chat. Everyone say hi, Nina. And I'll let Nina come up and just tell you a little bit about her and why we should be thinking about the growing senior market. Hey, Nina.
Hi, Bill. Great to be here. Hi, everyone. Um, Great to be here. I love these presentations. I love when I get to talk about reverse mortgages. I don't love when I get to talk about me, but I started doing reverse mortgages about early 2000s. I had a friend of mine. He, his wife was looking at them, said, "What do you know?" I said, "I don't know anything, but I'll do some checking into them." And I would touch base with them, and like a week later, I'd be like, "I don't know, I can't really find anything wrong with them. They seem pretty good." And then ultimately, about 2 months later, I was like, "I can't find any reason why, you know, your wife shouldn't go through this." "Oh, that's great, Nina, because she's already doing it." So after that, it was like I had gathered all this information about this product. I need to start marketing them. And I was at that time just a loan officer doing traditional loans, started taking up reverse mortgages, more and more, growing that business. And then I would say 2010, when reverse of purchase came in, I was like 95% all reverse. And now I'm still about 97% all reverse, but I love it. I do traditional loans, but there's nothing like a reverse. I feel like I could do them like in a heartbeat, and I just really enjoy them. Their clients are great, and I've learned that you know it's lucrative. I get to feel good about what I'm doing. These are life changes for a lot of people. I mean, we're helping people earn extra or have additional cash in retirement years. We're helping people buy a home with the same benefits as paying all cash. It's just a feel good product. And I'm so fortunate to be able to do them, to have notaries who want to learn and also do them as well. And so it's just been a great experience for me all the way around. And of course, meeting Bill has been probably one of the greatest relationships of my lifetime. And everyone I meet in the notary business, I just absolutely love.
Awesome, Nina. Yeah, we've got a really great group of people here, and I'm so
You
excited that
do.
you are so willing to share this information. So, let's take a look at the growing senior market. I thought these stats were really staggering.
Staggering stats. Well, yeah, I mean, the amount of people that are retiring that are, baby boomers right now, it's incredible. And more people we know are going into retirement, with not a lot of money And it's building up to 20% of the population who are going into retirement years, which is pretty big numbers there.
It is. And they've
Yeah,
got significant challenges right now too. Let's
absolutely.
let's do
You
this.
know, let's look at some of them. Of course, we get people have when we retire, we don't know how long we're going to live, right? Nobody knows. That's the great unknown. Had we known how long, we could plan better, but most of us don't know. And, what about long term care? Long term care, when you're in your 40s or 50s, it's so expensive. You can't afford it if you could get it. A lot of people think that reverse mortgages are really just for people who, have a lot of equity in their home and no cash. And that's not all this product is either. But if you can tap into some of that equity and make your life better and still not have to make a payment, that's a win-win. Aging in place, Bill, right?
Yeah.
I mean, I used to think aging in place means you just threw up some guardrails in the shower, right? That's what I thought. I didn't think about what it is. I mean, I've seen remodels that you have to do the whole house over. It's not just getting that walk-in bathtub thing. It's, making sure everything's flat so that you could, get a wheelchair in there. It's the cost, and it's totally a full remodel.
Yeah.
Uh,
I've
you
seen
know,
people put elevators up their
yes.
stairs. I've seen people
Yep.
lower the countertops. Like it's stuff you don't even think about
You don't even think
until you
about it.
need it. Yeah.
And elevators are pretty cool. But do you know, I didn't know this, but in some states, if you have an elevator in your house, which is a great way, I've had one client do it. You also have to put a telephone in the elevator.
Note to self.
Note to self. Yeah.
Uh,
But and there's just the money shortfalls that we have. It's
exactly. So let's tell them how the reverse mortgages solve the problems.
well, okay, so basically, the biggest debt that most people have is a mortgage payment. So let's say I have a mortgage payment of $1,800 and my taxes and insurance is $400 a month out of that. With a reverse mortgage, the first thing we're going to do is eliminate the mortgage. So we're going to refinance. This is a loan. A reverse mortgage is a loan. You're not selling the house. So it is a loan. We're giving you a loan. So automatically you're increasing your cash flow $1,400 a month because you're not paying principal and interest. Okay. Reverse mortgages, you do not have to make payments. You can if you want to. Um, and then what some folks are doing, they're taking funds out of their reverse mortgage. Let's say they own the home free and clear. They use a reverse mortgage, maybe use the funds to help them cover the cost of making the home so they can age in place. They use a line of credit for the reverse mortgage for a safety net. Some people take out reverse mortgages today with no intention of tapping into it today, but they want to let the reverse mortgage appreciate in the amount of money that they can have access to later to maybe cover the cost of in-home care or cover the cost of something they may need later. A reverse mortgage is a great safety net. And also, supplement income. If you're eliminating your mortgage payment, you're going to have a more positive cash flow. And in retirement years, the only way you can have positive cash flow, unless you're going back to work, is to eliminate that. And that reverse mortgages solves these problems really well.
Exactly. So let's tell them. I'll stop sharing my screen here and you can
Okay.
maybe demonstrate for us how reverse mortgages actually work. And I know you've got your playhouse, your house. I love it.
My playhouse. I have to move my screen a little bit so everyone can see my playhouse.
Yep.
So let's just say I'm just going to use round numbers so I don't get lost. Okay. Or if I do, maybe Bill will remember my numbers and then he can help me. So this is my house. Okay. It's 2 stories, but I never go upstairs, right? Because I'm older and it's painful, but I still love it. And you know what? I always want to stay here. but money is very tight. Let's say my house is worth $500,000. Okay. I have a small mortgage on it that, you know what, in so many years, maybe I refinance it, maybe not, but let's just say my mortgage payment is $1,400 a month. And all I get is Social Security and, medication. Everything is very expensive. So I look at doing a reverse mortgage on my home. Reverse mortgages are based upon your age of the youngest person on title. So let's say Bill and I are married. I let the cat out of the bag. Um, just kidding, everyone. And let's say, Bill is 68 and I'm 60. We would base all our numbers off the youngest person on title. Why? Because I'm going to live longer than Bill. It's expected because I'm younger.
Allegedly.
So, yeah, allegedly. So, actually, Bill is older than me. No, I'm sorry. I am older than Bill. Oh, sorry. Okay, so the numbers are based off the youngest person on title. As I said, this house is worth 500,000. Let's say I have a mortgage payment of 1,400,
1,400. Mm-hmm.
and my mortgage and my tax insurance make up the balance. Okay, so I have an appraisal done on the house. It comes in at 500. I owe $100,000 on the mortgage. So let's say the reverse mortgage is going to give me, I'm older now, okay? The reverse mortgage is going to give me $250,000, okay? Here's $250,000. I don't have to take all the money at one time, okay? Let's say we're going to pay off my mortgage. It's a refinance, okay? Just strictly a refinance. I'm refinancing it, $100,000. This comes off of the top of my 250. Okay. Now I owe the bank $100,000, correct? The interest is going to accrue on a monthly basis. Every month, I owe $100,000. I don't know, what is it? Let's say right now rates are 6%. I don't know. Let's say the interest is a couple $100 a month. Okay. So it just sits, it goes into a kitty, collects until the day that I pass or I sell the house. At that time, whatever money I borrowed is due, plus the interest that has accrued. Okay? Does everybody follow that so far? Okay. Imagine there's a kitty, whatever money I pull out, okay? Because remember, I only took 100,000. I still have $150,000 in there. What do I want to do with that money? It's my money. I can take it any way I want. All right. Only the amount of money that I pull from that $150,000 that's left is the amount of money that will accrue interest. So let's just say a lot of people, decide I'm going to leave it there for that rainy day. So reverse mortgages, the adjustable rate has something that we call a line of credit, which means that if I have $150,000 sitting in my line of credit, available for me to use, and I'm not touching it, it has a growth rate. That means that every month they're going to give me whatever the interest rate is. Okay. Let's say the interest rate right now is 6.25, which is about what they are. It's going to grow by 6.25% every month. All right. Which over time can add up. So you can see now, if I eliminate my mortgage payment, I'm 100,000. I have $1,000 more every month. I have $150,000 in this line of credit that, you know what, I'm not touching. I'm going to let the growth rate increase the amount of money I can have access to later, maybe to help me get some in-home care, whatever I need.
I think this is a really important distinction too, because we hear this a lot. Well, what's the difference between a home equity line of credit? This
Yeah.
growth rate right here, your access to funds actually grows with the reverse mortgage. You get
And you
access
don't
to
have to make
more
any
cash.
payments. And
Yeah.
then, the thing is that, if any of us, anybody out there that's young enough, old enough to remember in 2007, 2008, when the values were really high, Everybody took out, and a lot of seniors did it too, took out a home equity line of credit on their home. And that was everybody's safety net. But what happened when the value started decreasing and they considered it a declining market? They cut all those lines of credit. I know I had a $200,000 line of credit. I owed 60 grand. They shut off my line of credit. No more. Reverse mortgages will never do that on your line of credit. So hypothetically speaking, let's say I have $150,000 in my line of credit and it's growing. And let's say over time I have, 250,000 and the housing market collapses and my house is now worth $100,000. Guess what? It doesn't have any effect on me. I can still pull out all that money. They never freeze it. So it could be, hypothetically speaking, you could have more money in your line of credit than your home is worth. And they're never going to cut it.
Right.
Which is beautiful. So a lot of people look at a reverse mortgage. You know what? If they need it today or they don't need it today, the funds, but as a safety net, what happens in 5 years from now? My air conditioner goes. Well, I mean, 5 grand, 10 grand. Who's got 5 or 10 grand laying around? Oh, guess what? I don't have to take the 25% financing from the air conditioning company. You know why? I just call up the bank. I send in my form. Sorry, my dog heard me tapping. I send in the form, and guess what's in my bank account the next day? My money. But remember, if I had $150,000 that I could access, right? I had $150,000 I could access, and I owed 150, and my new air conditioner cost me 10 grand. Guess what? 10 grand comes out of my line of credit, decreases the amount of money I can borrow, increases what I owe to 110,000, and now the $110,000 will be accruing interest into the same kitty. Okay. Can I give another example, Bill? Do I have a second?
Yeah, of course.
Okay. So now let's say I play the lottery, and I win. I don't win millions, but let's say I win 10 grand. And I think, oh, what am I going to do with that 10 grand? I thought, oh, you know what? 10 grand, I'm going to pay it into my reverse mortgage. I can do that. I send the money to the bank, right? And what they're going to do is they're going to lower the amount of money I owe, right, by the 10 grand. And that will automatically increase my line of credit again, which means that, let's say down the road, I can always pull out that other 10 grand that I just paid in. All right. You'll always be able to use what's in your line of credit. When you make a payment, it reduces your principal balance, which increases your line of credit. A little confusing, but it is one of the magics of reverse mortgages.
Yeah, no, that makes perfect sense. Yeah.
Yeah. I mean, if you can think about having a safety net, right? Not having to make a payment and still being able to enjoy your whole home just by tapping into some of the equity. And you don't have to make a payment. A lot of people worry about, their heirs or, what am I going to leave my kids? In the 20 some odd years I've been doing this, I've only seen one client that was upside down. And that was primarily because it was just about 2007 when they did it. And then in 2009, she passed away. So, I mean, it's not equity stripping. We don't give people 100%. Depending upon your age, the older you are, the more money you get. The younger you are, the less money you get. Why? Because life expectancy. If I'm younger, I'm going to be expected to live longer. If I'm older, I'm pretty high up on the threshold. For giggles, we use the age 100. We estimate everyone is going to live to be 100. It doesn't mean that at age 100, somebody comes and knocks on your door and says, Bill, you're 100 today. Happy birthday. Now get out. Never. They just re-record the second deed. But we don't know how long people will live. So we estimate you're going to live to be 100. So if you're 90, you're going to get more money. If you're 62, you're going to get a lot less. Why? Because your life expectancy is longer. It's amazing, isn't it, Bill?
Yeah, sounds good. And we got some great questions coming in, but I'm going to hold those off to the end, guys. I promise we're going to get to your questions at the very end. Right now, Nina's going to walk us through some of the misconceptions that gave reverse mortgages kind of a bad rap there in the 80s and how it's
Yeah.
been overcome through some of the safeguards. So let me share my screen again and we'll look at now the, not this one. There we go.
There we go. Some of the misconceptions. So the reverse mortgages have been around since the 60s. Okay. Basically, how they started was from uh, a small bank, uh, and a phys ed teacher passed away, and his wife owned the home free and clear. She had no other money in there. And so they came up with this thing called a reverse mortgage. And basically, what they did was they said, okay, we're going to give you X amount of money. And then when you die, we're going to sell the house and we'll get our money back. Well, what happened was that when she died, she lived longer than they expected, and they had they were short. So basically, first several years of reverse mortgages, what they did is that if you were short when the houses sold, when you passed and they sold the houses, they sent the forms to the children or to the heirs for the difference between what was owed and the value, which was not very good. Made a lot of problems, if you can only imagine. There was also something called shared equity, which meant that, me as a lender, I would go on title with Bill. We shared the home together, shared equity, right? When Bill sold the home, let's say there was $50,000, left over as proceeds, I'd get 25, and Bill or his heirs would get 25. That is shared equity. Those were also very popular. Well, during the time of when President Reagan was in office, there were so many lawsuits about the shared equity and about the kids getting the 1098, 1099, 1098s. I think it was 1098, or 1099, saying, hey, yeah, you owe us this amount of money. We're really sorry your parents died. And there were so many lawsuits. It was just not good. So President Reagan decided, hey, how can we make this better? He sent it to HUD. HUD strictly made a reverse mortgage into an FHA based loan that you're not obligated to make payments on. So it's HUD insured. What does that mean? There's mortgage insurance, 2% of the appraised value up front. Okay. And now, if you've ever had an FHA loan, you know that every FHA loan has upfront mortgage insurance, of course, 2%. So does the reverse. And it's not out of line when you look at like a VA loan, because a VA loan, if you use it more than once, it's 3.3%. So basically, it's insured so that if you're upside down, they don't go after the heirs. And also it protects you, because remember, I gave that situation of the line of credit, right? Where maybe you have more money in your line of credit than the value of your home, and they do not shut it down. That's because it's backed by mortgage insurance.
Yeah.
So these safeguards really did help the product leap. Since then, we've had some other crazy things happen. For instance, in the early 2000s, reverse mortgages became very popular. I did a lot of them. But here's the situation. Let's say Bill was 63 and I was 60. At that time, you couldn't do a reverse mortgage with me on it. So loan officers would say to Bill, hey, Bill, you could still do it. Just leave your wife off of it. But remember, when she turned 62, refinance and put her on. Well, you know what? 2 or 3 years later, you think Bill remembers that? Oh, no, no. What happens? Bill dies. Guess what? The loan is due and payable. I'm not on the loan. We never refinanced. We never put me on the loan. I'm told I gotta leave. So what HUD did was they put a couple things in place. Number one, they grandfathered everybody in so that this was not going to become another issue. So anyone that this situation happened to got grandfathered in. Whew, that was great news. They also put stipulations in place. For example, both parties have to go on the loan, which meant that at that time, since I'm younger than Bill, I can go on the loan. That's fine. I won't have access to money if he dies, but I'm still able to stay in the house. I have rights to the property as long as I live there with him. And that was a safeguard. The numbers were based off me. We may have gotten a little less money, but I was assured I would always have a place to live, which is what Bill promised me. So, and that's kind of the safeguards that have been when things have come up over the past 10 or 15 years, HUD has done everything they possibly can to make it right. And so I think it's good. I mean, I think that right now we have some great positive directions in reverse mortgages, and the safeguards have really helped.
Yeah,
Um,
there's these other four safeguards here too. You want to touch on these?
yes, I'm sorry. Yes, let's do that. Mandatory counseling. Everyone that does reverse mortgage gets a proposal from the loan officer. Okay, I send a proposal out to Bill. Bill has to call up a counseling agency. Basically, what they want to make sure that Bill is aware of what he's doing, that Bill is aware of the fact that there's interest accruing, and that, you know what, the home has to be his primary home. And then it's also a non-recursive loan, which means that you will never owe more than the value of the home or of the appraised value of the home. So in the case where, let's say, Bill lives to be a very old man, he lives to be 100, and when he passes, he owes, $500,000 on his reverse mortgage, but the house is only worth 100,000. Bill's heirs, Bill's kids, or whoever can refinance the house for 95%. So you will never owe more than the value of the home. Caps on fees. We just can't make up fees, right? So basically, there's mortgage insurance, title fees, and the maximum amount of an origination fee that one person's loan officer can make is $6,000. That's it. And then financial assessment. We want to make sure that, Bill is always going to be able to make taxes and insurance, that he showed that he can handle the household obligations like taxes, insurance, HOA. And that is what financial assessment is. It's to make sure that after we look at what Bill's income is every month, deduct out all his monthly outgoing, credit report costs or his credit report obligations, that he has $600 left over. And so it's very simple and very easy to qualify for. If it's tight or he does not qualify, we do have some other means that we can count. And those are the safeguards, Bill.
Yeah, thank you very much. In particular, I really love the non-recourse part because
Me too.
you will never owe more than the value of the home. That's huge. And with that example that Nina gave, if you owed $500,000 on a house that was now only worth 100,000, your family can refinance that at 95% of the current appraised value.
And they
So,
own it.
and they own it, and that other
Mm-hmm.
debt just gets wiped out.
Yep.
Pretty amazing.
Yep. Yeah, it is. I mean, I could give you an example of the time of the one client I had that was upside down. Um, I do we have a second, Bill?
Mhm. Please.
Okay, so I did a reverse mortgage in California in Pismo Beach. If any of you know where that is, love the area. I've been doing business there for a long time. I had a deal with a woman who was I want to say, I can't remember. She was definitely in her mid 70s, had a condo free and clear, right down the street from the beach. Did a reverse mortgage because she wanted to take her kids to Italy and her grandchildren. Did the reverse mortgage, took them all to Italy, had a wonderful time. The money that was left over from the reverse mortgage, she put in a college fund for the grandchildren. Everything was great. Well, when the market tanked, she passed away. So she was upside down. The condo was worth at the time, I want to say 330,000. And the daughter was like, just let the bank take it. I was like, I don't think you should do that. I really had to talk to her about, you know what, this is a great opportunity. They had money, they could do it. Eventually, she did take my advice and refinance it for 95% of the 350,000 that the condo was worth.
Wow. What
Oh, but
a steal.
it gets better. So she's very nice. I like the mother very much. And, you know, the daughter would call me up periodically and say, well, you know, it's your rental. Nobody, you have no idea how much money they were collecting in rent during the summer. And I said to her, she goes, it's too much of a hassle. I don't want to be, I mean, it's too much. I said, fine. I knew somebody that did like property rentals. I said, here, call this gal. She's really nice. She'll help you. Okay, so she had them deal with it. She had to do nothing. I don't know when it was, maybe 2016. She was like, I really want to sell it. I said, why don't you just hold on to it? Well, guess what? COVID came. She was renting that place out all the time. It's so great. Right after COVID, she said, Nina, I'm really sorry. I'm selling it. I said, great. She sold that place for almost $3 million, Bill.
Wow. Wow.
And do you know that all the money that she was collecting rent on that thing while she had it, she paid off her mortgage, the reverse mortgage, and it sent their kids to college.
Yeah, that's pretty amazing.
It is.
You
And
changed their
yeah,
life right there.
yeah,
Yeah.
it changed. The grandma, the woman got to live her lifelong dream of
Yeah.
taking the kids to Italy,
Yeah.
and the daughter was a millionaire.
Yeah. Pretty amazing.
Wow, where did I go wrong?
I love it. All right, guys. So now you can kind of see why reverse mortgages are increasingly popular, especially when you understand them. They
Mm-hmm,
can help solve very practical problems for seniors. And
mm-hmm,
with these consumer safeguards in place, they trust this product even more than before. So that's why every year you're going to see somewhere between 16,000 and 24,000 reverse mortgage closings throughout the country. Some years I've seen as high as
mm-hmm,
33,000 closings too. And that's why the industry needs you. Because when you are trained and uh, in the full reverse product, meaning you understand what the product is intended to do, why and how it helps seniors, and what the process and the documents are like, you can literally change a senior's life just with that understanding. And then, of course, when you have this entire industry of passionate professionals that just want to help people, and they will come to trust and rely on you to take care of their customers. Because here's the thing, you as the notary is in reverse mortgages are very oftentimes the only human being that the signer gets to see in person throughout the entire process.
mm-hmm.
Because not all loan officers are like Nina, where they go to their own closing appointments. And sometimes that's not their fault. Sometimes their office just happens to be in a different state. So, understanding what it takes, having that extra patience, the compassion to build in extra time that it's going to take to do these signings successfully really stands out and makes a difference. So here's what you can expect at a reverse mortgage signing for those of you that may not know. It's definitely going to be more paper. There's no getting around this. We have tried everything, but it's just still an old-fashioned industry. So some of these signings will have 200 to 300 sheets of paper, and you might have to print out 2 copies. And for a few reasons as well, these appointments are going to take a little more time. Uh, there's a lot more paper involved, so there's a lot more signatures, but you're also going to be working with seniors that might have some muscle or joint conditions that slow them down with their signature. It might take a little more time to read some of the more important documents. So we always recommend that you block out at least 2 hours for these appointments. And then really the best part of these, if you know what to expect and you build in the extra time for it, are the people you meet and the stories you'll hear. I've met some of the most interesting people at these reverse mortgage signings. They've got stories and photos that are fascinating. And for these reverse mortgage signings, I break my rule of not eating their food and drink. They oftentimes want to feed you. They always offer cookies. I've had breakfast, lunch, enchiladas. I've had all of those things at these types of appointments. So, for you who came into this business and truly love being with and helping people, learning from people, reverse mortgages can be very rewarding in many different ways. And of course, for all these reasons I just mentioned and more, you deserve to earn more per appointment. Now, when you're working with companies that understand the process, like when you're working directly with either an escrow company that specializes in reverse mortgages, because they do exist, there's a lot of them, or a lender that specializes in reverse mortgages, you can command higher fees, especially through with this specialized training that we're about to tell you about. Now, you should be earning somewhere between $200 and $300 per appointment when you are direct. When you're not direct, if you're going to work through a signing company or the platforms, you can, of course, expect that they're going to start on the low ball. That's just the way these things go. I've seen some of the reverse mortgages come in for $60 to $100 for a full reverse mortgage, but the economics of that does not add up. You can't print 600 pages, travel, and spend 2 hours with a client and be profitable if you're only charging 60 bucks. The key to this is direct. That's why I advocate that you go escrow direct or lender direct with this. When you find a lender or an escrow officer that specializes in reverse mortgages and they know that you're trained and you share their passion to help their customers and they can count on you not to kill a deal at the closing table, they're going to stick with you. They're going to make sure that their escrow officer knows you exist and say, I want Bill to be my notary at these appointments. And they'll pay you what you're worth. Now, one of the unique features of a reverse mortgage is that very often notaries are called to help facilitate the application process as well. Many of the seniors that want to apply for a reverse mortgage, they don't have the technology skill. They can't just jump online and fill out an application and start the process. So some of the lenders will actually hire notaries to go out and gather signatures on the application. Maybe some additional documents to social security letters, those types of things, sometimes death certificates. But there's usually no notarizations included. They just want you to help gather that documentation. And those will typically pay anywhere from $80 to $100. But what makes them so valuable is that you get your foot in the door and start building the relationships with both the lender, the escrow officer, and with the signer. So if you strike up a relationship and they love working with you, the lender's going to want continuity in the transaction. So if you came for the application, you did a great job, there's a really good chance that you'll get hired for the closing as well. So you're getting paid 80 to 100 on the front end and hopefully 200 to 300 on the back end. So that right there automatically increases the lifetime value of that customer for you. So it takes a special kind of notary to really embrace and enjoy reverse mortgages. If it calls to you, the industry's ready for you. Your next steps is just to enroll in the Certified Reverse Mortgage Signing Professional Program. And it's very inexpensive, especially if you're already a high performance notary member. Once you get inside of HPN, you get trained, certified, you're going to get access to the list of reverse mortgage lenders, the reverse mortgage title and escrow companies that help process those 16,000 to 33,000 reverse mortgages every single year. These are lenders and title companies that specialize in reverse mortgages. Some of them, that's all they'll do. They don't even do the forward mortgages. They're passionate about the work, and they love working with notaries that are equally passionate and trained. And because certification is only as valuable to the marketplace when it gets implemented, we included the program in High Performance Notary so we can give you the marketing support templates, the guides, the coaching to position yourself as a reverse mortgage specialist. So I put this in here for you. I'm not going to go into a whole lot of detail here. Guys, I've been talking about High Performance Notary for a long time. It is the largest community of notaries on school. We're doing really cool things there to help you stay consistent with your marketing, building habits that get you in front of people who will hire you every single day. So I tell people, come for the certification, join High Performance Notary for 49 bucks, get the certification, but stay for the support and the structure. And I'll put this into the chat for you.
Hey, Bill, can I just make a comment on the
Yeah,
platform?
absolutely.
So way back when, I used to work for a sales trainer by the name of Tom Hopkins. Some of you might know him, heard of him. I worked for him for a couple of years. And of course, when you work for him, you have to be a student of his education. And I actually loved, I mean, not everything, but a lot of it was very good discipline. And when I popped on to the school and I was watching and listening to Bill's course, it reminded me a lot about my training in sales. And I think that no matter what you do, if you want to start up a new business or anything, I really find that the training crosses all boundaries, not just notaries, but you can apply it to any business you want to start.
Yeah.
And I think, it's very, I mean, I was listening, I was looking, I was like, oh my God, this is like stuff I should have been doing years ago. I should have been doing this, but you can apply it to everything. So,
That's so true, Nina. I'll just tell this to you right now, guys. What we teach inside of High Performance Notary is the exact daily do's, the steps, the top of mind method, everything that I used to grow my business as a loan signing agent. And then it's the exact same thing that I did to build my business as a trust delivery agent. The prospecting, the reaching out to people who might hire you or refer you to others, doing that consistently every single day is the only thing that makes your phone ring, except now we also have Google Business Profile. So, of
mhm.
course, we include the Google Business Profile Mastery course. We include the World of Apostees certification course. We include the Reverse Mortgage Signing Professional course. There are 8 courses included. So you can get your certifications, you can get your training on boosting your online visibility, social media, AI, using ChatGPT, the whole thing, it's all included. We built this community so you'd literally have everything you need to build a business that will finally get the traction that you want it to have. You know, everybody thinks that there's some sort of shortcut, and we're sold shortcuts every single day. Oh, you don't need to do this. Don't, it's easy way to do this. There's no easy way, guys. The path to success in this business is reaching out to people who will hire you and introducing yourself to them and bringing value to the relationship, or boosting your online visibility in such a way that they can find you when they need you. That's it. So great questions that we've got here. So let's go ahead and move to the Q&A
Excellent.
session. Nina, are you ready for this?
Bring it on, Bill.
All right, I'm going to do a couple of these first, just about the offer, the high performance notary, all that good stuff.
Okay.
Is this already included if you're a current member of HPN, or is this additional charge? Great question. So if you are a paid member of High Performance Notary, these courses are already included. So jump in and take advantage of that if you are a paid member. If you are not a paid member, if you were one of the few in the very beginning, almost a year ago, that were able to join High Performance Notary for free, you'll have to pay for those courses separately. And then Mule says, what if you don't want all included trainings and only one product? So you get everything. The price is 49 bucks. Guys, it's 49 bucks a month, whether you want one thing or you want them all. It's all there for you. Gary says, is each certification sold separately? No, it is not. It is all part of High Performance Notary at $49 per month. And can I go back to screen one? Boy, that was a long time ago. I don't know that screen one. Screen one is just the title of the thing. So if you can tell me, Mule, which screen you'd like to see, I'd be happy to go back there. All right, let's get into the reverse mortgage questions. Let me just paste this link in here there for anybody who'd like to. Oh, the screen before this one. That I can do. So this is our high performance notary action plan. This is what I build the whole thing on. I told this certification before when the certification was introduced. How do I get access to it again? Juliana, it is in your notarycoach.com account. Whatever account you purchase the program for, you can just go to notarycoach.com/login, log into your account, and you'll see all of your courses you've ever bought from me. All right, let's get into I'm going to stop sharing the screen here so we can see Nina's face as she answers these great questions. Okay, so John says, are the fees at the creation of a reverse mortgage financed by the reverse mortgage, or do they come out of pocket?
So, great question. So the cost of the reverse mortgage, the mortgage insurance, title, origination fees, all taken off the top. Okay, so you don't have to pay all those. It just comes off the amount of money that you can have access. The upfront costs, I'm going to say it's $199, seems to be the average for the counseling and the cost for the appraisal. Now, there are times when I have a client that doesn't have the funds, and I'll pay it and I'll get reimbursed for the appraisal.
Got it. Great question. So it's basically rolled into the loan if they
It's
wanted
rolled
to.
in, taken off
Yeah.
the top.
Yep.
Mhm.
Okay. Great. Great question. Let's do this one. Now, Desiree says, can you use a reverse mortgage when the home is in a trust?
Yes, just like every other, it's a little bit different though. So if you don't mind, I'll give you a little
Please.
detail.
Yeah.
So if you like, let's say you want a 30-year Fannie Mae fixed loan, right? I'm only going to ask you for the trust cert. That's good enough. But with reverse mortgages, we need the complete trust. The lender has to review it, and the lender's attorney has to review it, and also the title company has to review it. But yes, just like any other loan, if you're familiar with it, what happens is that we're going to take it, we're going to record it, and then we go back in and do it as a trust, just like a traditional forward loan.
Yeah. Awesome. Great question. Another great question. Can this product be used for manufactured or mobile homes?
Absolutely. Manufactured home, mobile homes, as long as it's real estate. In other words, if you deal with motor vehicle and it has tags on it, no, you cannot do a reverse mortgage. But if it is real property and you're paying property taxes on it, then yes, we do a lot of them.
Awesome. Great question. Desiree says, how does a reverse mortgage affect homeowners with equity in their homes?
So a reverse mortgages, we're not doing 100% equity stripping on loans. So based upon your age, okay, we'll lend you on some equity. However, when you pay off the loan, whatever equity is left over goes to you or your heirs. I think that might have been the answer to her question.
I think so. And I bet we kind of circled back on that in Desiree. So if we're not answering the question, please let us know.
Yeah,
In fact, I'll make it so you guys can raise your hands and unmute yourself too. But yes,
nice.
there we go.
I love that.
Uh, John says, does increasing the interest owed reduce the line of credit? In other words, I think let's say you do take out 10,000 of your $200,000 line of credit, the
Mhm.
interest that accrues on that, does it lower the available
No,
line of credit?
no. So it's two set. So let's just look at it this way. We got two separate buckets, right? We got two separate buckets here. This is the money you can tap into, right? And this is what you owe. So if you take money from here, from the reverse mortgage, now you're increasing your loan balance. The interest accrues over here of what you owe. It doesn't impact what you can borrow.
No, that's fascinating.
Me and my money.
Yeah, I like it. All right. Now we have Michael who asked a question. So let me read this and see if I understand, because it looks like I might have to clarify something here. It says, what is cost on average for us to create the paperwork for a reverse mortgage loan, and do we claim on taxes? So the thing I just want to clarify here, because we're using language like create, Michael, we do not create any of this paperwork. We are simply the mobile notary, the notary signing agent that specializes in the reverse mortgage. So we only do our typical responsibilities, right? As a notary public, you do your notary role there. And as a signing agent, you're going to be gathering signatures, briefly describing documents, making sure that things are done correctly, and shipping documents or dropping them off where they belong. Do we do copying? We don't do any copying usually. These are usually going to be printing. Printing is a big deal, so we have to print all this paperwork out. It's somebody else is already creating it. We are not document preparers. So I hope that clarifies on that one. Nina, does it sound like I'm on track in that answering that one? And Michael, if I'm not,
Yeah. I mean,
please.
I think, yeah, you're not preparing documents. You're going to print out probably, I'll say 450 pages. And then that would be whatever your cost of agreement paper is. And then, your time.
Yeah. So typically, Michael, too, yeah, the printing, right? So you'll print out two copies usually. So you'll walk into the appointment with two blank copies of the full documents. You'll facilitate the signing and gather signatures on one, leave a blank copy, and then you will deliver the fully executed documents either to the shipping center or to the office. Right. Nina, let's give them your contact information. Can you type that in the chat there? I'll tell people for the
Yeah.
replay too. It's nhpenny@msn.com.
I'm going to type it in here so I can do it to everyone. Okay, there you go. Excuse me, everybody. I'm a little bit blind today. My glasses are not the best.
No problem.
And then
All right. And then,
we forgot to tell everybody about my weekly calls.
yeah, we didn't even touch on that, but
I know
part
we
of the
didn't.
Certified Reverse Mortgage Signing Professional Program in High Performance Notary every Thursday, except for the last Thursday of the month, because it's crazy sometimes. Nina leads a continuing education call so she can answer your questions, helps out on the test questions as well, and then delivers a lesson as well. And what you know, you love these calls, Nina. What else would you say about those?
Um, I think what we've been really kind of going into recently is really trying to go over, look at the actual paperwork. I do it from the system where I print it from. I kind of like to go over it so everybody gets to see it, explain it. That's been one thing that we've been doing a lot, talking about not only the state of the union of where reverse mortgage rates are going, but also traditional loans and where the interest rates are going. And I think we talk about the markets, and it's 95% reverse, but we do a little tapping into conventional loans. But basically, it's just kind of explaining the product a little bit more. We talk about how to market it, right? I love to tell people some inside information, like, me as a loan officer, where how I would go get business. Yeah, some you probably know of, and there's probably some ideas in there that you may not even think about.
Yeah,
That's what we do.
I love that. Plus, it really does a good job of keeping your finger on the pulse of mortgages all the way
Yep.
around. So
Yep.
Desiree has her hand up. Desiree, come on up. How can we help?
Hi, can you hear me?
Yeah, sure can. Hi.
Yes.
Okay, great. Thank you for taking my question. I put it in the chat, but I wanted to know upon completion of the CRMSP program, will the notary receive an actual certificate And can you also use that CRMSP designation like you would if you were MD or PhD? Can you use that in your title?
Yeah, great question. I'll take this one if you don't mind, Nina, and you can back me up. But the we use a service called Accredible for our certifications, and it is blockchain secure. So anybody that's going to hire you, if they're that concerned about it, they can click through and they can see, yes, this is a valid certification. You can print them. You can easily share them on social media. You get your own link that you can add to your email signatures. And you can absolutely use the CRMSP designation once you've earned it, right? Well, what I'll tell you is that just like I see on LinkedIn all the time, you can see these people with all these designations after their name, and I have no idea what any of them mean. I really don't. It looks like they're smart. That's pretty much it, but I have no idea. So I would, if you're going to take that, if you want to use it, you can, but also describe it in your narrative on LinkedIn, on your website. What is it that means? What does that mean for the people who hire you? It means that you are trained and that you're passionate and you care about the working with seniors so much that you went through additional training to make this happen. So
You know what I
yes.
just realized, Bill? I don't
Oh,
use my CRMSP.
yeah, yeah. Oh, you don't even use, well, it's on your
I
website.
don't
So
have it. I should. I need to add that on.
yeah, exactly. Exactly.
Thank you, Bill, and thank you, Nina.
You're
Yeah.
welcome.
Great
Thank you.
question, Desiree. We got a lot of great questions here, and I promise we're gonna get through all of these. So Val, I see ya. Let's see what your question was. Before I start, do I need primary mortgage insurance? Or I'm sorry, not insurance, experience. So I will say this. You don't have to have mortgage experience, meaning we don't expect you to go out and be originating loans or anything like that. But I will say that it will be a lot easier for you to tap into this and flow if you're already a loan signing agent or a notary signing agent that is doing forward, what we call forward loans first. And then the reverse mortgage just can slip right onto that. Now, here's the thing. If you're brand new and you're still figuring that part out, totally understandable. Start with the forward, add the reverse. That would be the natural flow of things that will make, because the training will make a lot more sense for you as well. And guys, the my loan signing agent training is included in high performance notary. So it's literally, like I said, everything that you're going to need. So that forward loan training is included with this. The same thing, no extra price. It's just $49 for everything. So you can get forward and reverse training, plus everything else that you need. And we set up a structure. This is one of the biggest mistakes that notary entrepreneurs make, is they try to do everything all at once. There's so many cool ways to make money and to help people in this business. You try to do everything all at once, and then you just end up spinning your wheels. Like, what do I talk about? Who do I talk to? It's overwhelming and crazy. That's why I started High Performance Notary. We give you the structure. Focus on this for 90 days. Focus on that 90 days after that. What kind of results do you get? If you don't have the results you want, then stick to it. And then every single day I'm in there and I set you up and I said, all right, what's your top 3 priorities today? Every single day, 7 days a week, I live inside there. Coaching from a different perspective. How to grow a business, not how to stamp paper. That's important. We got all those resources for you, but I'm going to teach you how to build a business. All right, lots of great questions in here. Let's see. Did you say the apostille program is included? Yes, Gary, I sure did. The World of Apostille certification program is included in High Performance Notary and is all $49 per month. All right, there's Desiree's. How can I email Nina? We got that taken care of. All right, Angela says, if the home's left in a will for the signer's children, who pays back the reverse mortgage and how long do they have to pay the loan back, Nina?
So, okay, so we're going to do it this way. Let's say that it's Bill and I'm Bill's heir, and Bill has passed away. I have a choice. I can sell the home and keep the proceeds myself, or I could refinance it and keep the home for whatever reason I want. Okay,
Either way,
those are your choices.
either way, the reverse mortgage gets paid off with the proceeds
Right,
from that sale or
from the money.
refinance. Yeah.
So the first thing that happens, if anybody thinks that a mortgage company does not know Bill's dead, you're wrong. They'll probably know as soon as anybody else knows. Social Security finds out, and boom, everybody's aware of it. Okay. The first thing that happens is that the lender sends out a letter. And I let people know this all the time. It is not a nice letter. It is not, oh, we're so sorry for your loss. Da, da, da. It's not, it is a demand letter. Okay. And how much time you get, it depends on how you handle it. There are some people that don't reach out to the lender that and that can cause a rough road. That can cause foreclosure. I have a client, I have a friend right now that is a real estate agent, and the parents passed away on the home over a year ago. It's still on the market. HUD has been working with them and been very patient with them. It depends on how much they deal with HUD, and you keep them up to date. They'll extend it 3 months at a time usually. Like I said, these folks right now, it's well over a year, and there's still $300,000 worth of equity in the home, and they are working with the kids to try and sell the house.
So it sounds like communication is kind of the key in that. Just don't tuck
Yeah,
your head in the sand. Just communicate about what's happening, which profit you're
exactly.
making. Yeah.
I mean, because not to sound bad, but there's definitely some people, some younger people, that think, oh, you know what, there's a reverse, no one's going to know. I'm going to live in the house forever, and that doesn't happen. Or they're going to try and rent it out. There's always those people that kind of make it tough. So communication is the big thing.
Awesome. What a great question.
Hmm.
And then we got another one here regarding the mobile home question, going back. So if you do pay a property tax bill,
Hmm.
that would qualify for the reverse mortgage. So you have to own the land. It has to be permanently affixed, in other words.
Yeah. So you have two types. This is any kind of loan. Two types of properties. You have a mobile home, right? When people talk about mobile homes, they're usually mobile homes, right? So you hitch it up, drive it to the place, drop it, you can tie it down, but it still has license plates on it. And, just like you pay your car registration every year, you're going to pay for your mobile registration every year.
Mm-hmm.
And pick it up, move it around. Manufactured homes usually only moved once from where you buy it. They come and they put it on the lot. They tie it down correctly. They take the plates off the mobile home, take it to motor vehicle, turn it into motor vehicle. I'm sorry, they turn it into the county assessor, and now it is real property. So yes, if you're paying property taxes, then yes, it would be eligible.
Yeah. Fantastic. Great questions, guys. Last chance.
And we love, you know what? There's nothing wrong with doing a reverse mortgage on manufactured homes. I do them all the time.
Yeah.
Yeah.
Beautiful. And we didn't even really get into the reverse for purchase either,
No,
Nina.
we didn't.
So
We
what we've
didn't.
been mainly talking about is refinancing.
Yep.
But guys, you can use a reverse mortgage to buy a home as well. Anybody interested in hearing that? Just show me a yeah. Oh, I saw Desiree's hand. I think Nina,
All
do you
right.
have a few minutes? Can you
I
just give us
do.
an
You want to do
overview
it
of
quick?
that? Yeah,
Yeah, I
let's
got my
do it.
props right here. Hang on, everybody. Let me get up here. Here we go. We're gonna do the Evelyn Wood
All right.
speed. Okay, here's my house. All right, here's my house right there. Okay. All right. All right. I'm just gonna use round numbers, okay? All right, here we go. Shopping for a house. I find this house I absolutely love. The sale price of this house is $500,000. I just sold my other house and have $400,000 in my pocket, right? This house is 500. I'm going to use round numbers. Okay. Let's say a reverse mortgage is willing to give me $250,000, a loan for $250,000 towards this house. I'm like, that's beautiful. I'm going to have extra money for me doing it this way. So $500,000 house. I'm going to take $250,000 from my little nest egg, and I'm going to put it as my down payment. The lender's going to give me a loan for $250,000. Okay, so the lender's loan for $250 and my deposit of $250, my down payment of $250 makes $500,000. Right now, go to closing. No mortgage payments required. Only thing required is that I keep up on taxes and insurance and HOA. Not a problem. Okay, so now I own the lender. I owe the lender $250,000. Interest every month is accruing on that property. Okay, until the time I pass or I sell it. So let's just say after 5 years, okay, I think, oh my God, it's a 2-story house. It's just too much for me. I can't get upstairs anymore. My knees are shot. I got to sell it. I call my real estate agent. I say, I got to sell the house. Well, now it's worth $700,000, right? Okay. I find myself a 1-story, flat, beautiful. I want it. I sell this house, and I said it's going to sell for $7, right?
$750.
$750. Okay. So I borrowed $250 from the bank, right? And let's say we have, I don't know, I'm going to guess. All right. Let's say $50,000 in interest. Okay. So I owe the bank $300,000, right? I sell this house, $750, right? 700, 750?
I can't remember. Let's say 750.
Okay,
It's
750.
a beautiful house.
It's a beautiful house. Okay, so I sell the house, 750. I owe the bank $250 plus the $50,000 in interest. That's $300,000, right? Okay. So how much money am I walking away with?
450 grand.
450 grand. And the most amazing thing that I find about the reverse purchase is that I have one realtor that, God bless her soul. She is the nicest lady ever, but she is going to do the math on everything. Well, she calculated the reverse mortgage on her friend that did one and lived for 6 years, and actually sold the house and realized that, she lived there and it was a wash after 6 years with no mortgage payment.
Rent-free, no mortgage payment.
No mortgage payment. She sold it exactly for the same amount of money, or she netted the same amount of money as she originally paid for it.
Yeah.
Boom. That's beautiful.
What I love about it is you get a lot of people that, especially at retirement age, they're like, I've got $500,000 in the bank. Maybe they sold. We get this a lot from California. They sell their homes for $2-3 million. They come up, they want to buy just a condo cash for 500 grand, but they could be saving 250 grand of that cash.
Yeah.
Just putting 250 down.
Yep. And I know the same benefits of owning it free and clear.
Yes, exactly.
Yep.
And you get an extra 250,000 freed up cash to do something else.
Yep. Or, just put away for that rainy day. And then what happens is that after 2 or 3 years, like right now, if you were to buy this house in that situation, you know what, when rates come down, what's going to happen to the market? If anybody doesn't realize, can I go on my tangent now, Bill?
I think so. There's no stopping the Nina train.
Okay, here we go. I want everybody to think about this. It's my opinion about the market, but I've been around, I've been doing this slumpy stuff for some time. Here's my prediction. Right now, this is a buyer's market. Okay. We see right now, because rates have not moved, sellers are at the mercy of somebody wanting to buy their house. The minute rates come down or start creeping down, you're going to see an influx of listings.
Yeah.
And you're going to see more and more buyers coming into the market because now they're feeling positive and they're feeling good about it, that we're going in the right direction. When that happens, it now becomes a seller's market.
Yeah.
What happens when a seller's market happens? Values
Prices
go
go up.
up.
Yep.
So in a couple of years, right, I got this house. Okay, I bought this house when it was a buyer's market, right? 500 grand. Guess what? In 3 years from now, it is a seller's market. I'm going to sell for $1 million.
Yeah. Well, as Guy said, with that hinged roof, it's got to be worth that, right?
Yeah, it is. It's not very good when it rains, though.
I love that. So we got a question about this from Desiree.
Okay.
She says, "What's the age for reverse for purchase? Is there a
We go
different age?
down. We go down to 55.
Oh, wow.
So as long as both people are 55. Now, the traditional Heckham products, one person has to be at least 62. Okay. But on the traditional product, on the proprietary products, it's a private product, we go down to 55. And let me tell you something. I saw one of those proprietary products that has the best LTV I've seen out there in a long time.
Yeah, nice.
Yeah.
And so just to explain proprietary, that's just when a lender comes up with their own product.
Yes,
That's
but they're underwritten the same way as the traditional FHA loans. Written by the same guidelines. Everything's exactly the same. Non-recourse of loan, counseling, all the same safeguards as we went over before. Nothing's different. The only thing that's different is that these products don't have mortgage insurance broken out. The mortgage insurance is wrapped into the rate. But like I said, I saw this new product that I saw has the best loan to value that I've seen in a reverse in years.
yeah. Awesome. Great questions, guys. Love these. So a couple of things. So sure, you can jump in, you can get additional training with the Certified Reverse Mortgage Signing Professional Program. You can join HPN, but also Nina's here as a resource.
Mm-hmm.
Nina is licensed in multiple states. God, how many now, Nina? I can't even remember. I ask you all the time. I
Quite a
can't.
few. Yeah,
Yeah,
quite a few,
it's a
Bill.
bunch. But she also has connections in lots of states too. So if you have a client who needs a resource for a reverse mortgage, Nina can be your person. If you are interested in a reverse mortgage for your own personal situation, Nina can be your person. Reach out to her, start building, leverage my relationships to become your relationships. Nina loves you. She's got a little signing company as well. She
Mm-hmm.
specializes in this. Um, so there's
And
lots
most
of
of all, yeah,
opportunities.
most of all, you know what? I want everybody to be able to make more money. I have no bones about giving out my telephone number. Everybody knows that. I think it's on every bathroom wall, probably in most states. But I have no problem. I get a text sometimes from people who are doing a signing and they're like, I got this question. Listen, I want all of you to be successful.
And I know that you mean that, and it's proven
Mm-hmm.
every day. So Natasha, thank you for asking your question. You are a free member inside of High Performance Notary. So the course would just be the one-time fee in the classroom. Awesome. Getting lots of love there, Nina. Thank you so much
Oh,
for making the time for us. I love this time together. Thanks for hanging out with us. And thank you
yeah,
all for sacrificing your Tuesday morning and
it
afternoon
is.
to
Feels like
learn
Monday.
to grow your business and grow yourselves. This is an important product, a great way to bring value to your network. So thank you for being here.
Hey, Phil, can I just add one thing?
Of course.
If you try to get in touch with me and you want to email me, great. But I can tell you, if it goes into my junk, I get normally 100 in there a day. I just delete it. It's best off if you text me.
Yeah. And Nina actually is one of those that answers her phone too. But
Yeah, I do.
all right. Thank you very much. Enjoy the rest of your week.
Thanks, everybody.
Later.
Thanks,
Bye-bye.
everyone, for showing up. Bill, thanks for having me.
Yes, thank you.
Okay, bye, everybody. Take care. Great seeing you all. Thanks for taking your time. Really appreciate it.